Okay, so nothing's happened there.
Take a minute.
Good afternoon. I'm Jody Ellis. We're back here doing another live session on US presidential election trades, and we've got a trade that can start today. We've got a trade that can start Friday, and then we'll discuss a couple more trades that we have as well. So we do a bit of education at Investor Centre, and you can follow me on Twitter, Jody Ellis at IC Hot Stocks, and I talk about stocks and things in the market there. I'm the CEO of Investor Centre, and I've got a couple of books out there from quite a long time ago. I provide technical and financial advice to institutions and wholesale clients, and I am licensed financial planner and stockbroker, but I have no retail clients. It's a no advice session, which means that this is only a guide. I'm going to be talking about things that I'm going to do that you may want to do, but they may not be appropriate for your circumstances, and there's no warranty or guarantee given by Investor Centre. We're not liable for any loss or damage arising from the action that you take, and it's a representation of what I'm going to do in the market. And in viewing this presentation, you must accept full responsibility for any action that you take resulting from the information presented. So we just want to have a look at a map of the election. We had a look at that last Tuesday, and that was, or last Thursday, and that's still available on the Facebook page, on Investor Centre Facebook page. Then we're going to talk about the S&P 500. The S&P 500 with the Australia 200 as an inversion trade, gold, and then a few more trades that are coming up. So won't be a 40-minute session I'm anticipating this time. So the election outcome, we've got Biden and Trump. Now, it's my opinion that a vote for Biden is a vote for Kamala Harris. I've been talking to some people in the government in the US, and we're looking at a Biden victory actually bringing to power the first woman president for the United States. If Biden's successful, by the way, she'll be the first female VP for America as well. So in your understanding of what's going to happen in the marketplace, it's important to have a look at Kamala, do a bit of reading on her, because she is technically, by the end of next year, the US president, and not all her policies are Biden policies. It's worthwhile taking on board. Now, this is my interpretation of what's going to happen at the upcoming election. So today we had Amy over there confirmed by the Senate for her position in the Supreme Court. She's been appointed by Donald Trump. We have to say she's a Donald Trump supporter. There's a dominance of Republican judges in the High Court. And if we go back to George Bush in 2000, if you're not familiar with that, it's worthwhile doing a bit of Googling on it, because that election was won in the High Court in America 2 months after the election, when everything was disputed. The High Court ruled that George Bush was the president, and he became president from that ruling. This is why the Democrats are complaining about the appointment of a Republican judge prior to the election. Both Biden and Trump have expressed issues about the postal system and about the voting. So no matter who wins, we're expecting a protest from the opposing party. The election won't be over with somebody claiming a victory. The election will finish with someone announcing their defeat. And that's fairly important for what we're going to talk about today. Now, we're dealing with fear, uncertainty and doubt. we've been watching the US market starting to fall, and for those people who went short last week on the S&P, you're doing fairly well so far. We've picked up about 50 points already, and now we're expecting that to accelerate in the next short term over the next 3 or 4 days. The reason that the market goes down into an election and up after an election is that people with uncertainty will sell. There's not too many people lining up to say, I'm worried about this US election, I'll buy some stock now because they're cheap. Now, they are cheap, and there are some people doing it, but the majority of people will buy when they know what they're dealing with. Are they dealing with a Biden US, or are they dealing with a Trump US? And Biden is, his platforms are not particularly stock market pro, but Trump's policies are particularly biased towards pushing the stock market up. So Biden's actually saying we're going to look at introducing new taxes and increasing taxes. That hits the bottom line of publicly listed companies and high-level employees, etc. So even with Biden's stance there, a Biden victory, a clear victory, will see the stock market rise. And all we're doing is going back to fair value. Now, fair value, as you can see on the screen there, started at 35.50 and has been falling down ever since. And we've gone down relatively quickly. So last Thursday, we were at 34.50 and we're now at about 3,400. I haven't had a look this afternoon, but this morning we're at about 3,400. And on Friday, we're expecting to be down at 33.50. So about another 50 points or more. Now, I have a sleeping order waiting there at 3,300 in case the market spikes down, but you do carry a bit of risk with that. If the market spikes down and picks up the 3,300, it could be for something other than the US presidential election. So nuclear detonation in New York, something China invades Taiwan or something, could see the US market drop down substantially. We're not expecting that this week, but obviously an overnight disaster could leave you stranded in that, and so you need to have a stop, and I call it a crash stop, which would have to be about 100 points away. So we're at the moment about 100 points from that place, and we're expecting by Friday to descend to 33.50. Now we can see the market's been descending from the end of November, end of October, and we're going to go into this Friday, short into Friday, and then we can go long after Wednesday next week. Now, the trigger, the ideal trigger would be a victory declared, but I'm going to actually take some positions, because the problem with the disputed outcome is the market's likely to go down, but we won't have knowledge of when the market will actually start its rally up. So we actually need to be there beforehand. As a guide for how many contracts you would do, we're talking about, I'm going to display here City Index, and I'm going to do these trades on the AT Pro platform on City Index. If you haven't got a City Index account, then you can actually mail in or phone in to Administration and Investor Centre and get one organised. But if you've got $10,000 in your account, you can divide by 1,000 and you would take 10 contracts. That's a very, very low risk scenario. And for every point that it goes down, you would literally make $10. And for every point that it goes up on the other side, you'll make $10. So if we come down 50 points, that's $500 US on that ratio using a $10,000 account. And then if it goes up back to 35.50 from 33.50, you would make $2,000 US for that on a $10,000 account. Now, with the City Index AT Pro platform, that's the one that I use, and you can see there I've got a sleeping order. You probably can't see it that well. A sleeping order at 3,000 for 500 contracts there, and here we'd be using the US S&P 500 CFD. We can sell it tonight and then ride it through to Friday, and then we have to come out Monday. We don't want to do much with Monday, so your choices are to ride it across Friday and then a closed market, which would need a guaranteed stop, or close out Friday night, Saturday morning, ideally Saturday morning about 6 a.m. And that is going short on the US S&P 500 CFD to capture the expected fall now, which can be as much as 100 points, but we're expecting about 50 or so points. Remembering the market actually went down to 33.70 last night before bouncing back up again. Now, the trade that we talked about last Thursday was an inversion trade, and that's actually useful at this time. You won't make as much money with it, but you don't carry as much risk. Unfortunately, risk, reward, risk, where are we? Risk, reward. So we can't have risk, reward. That's very difficult to find. So we can reduce some of our risk here and still make good money in what's called an inversion trade. The S&P 500 will fall more over the next few days, and on the other side of the election, the S&P 500 will rise more than the Australian market. So what we have is the Australian market at the moment strong and the US market weak. In a few days next week, on the 3rd of November, we'll have the US market tending towards strength once there's a positive outcome for the election, and the Australian market won't be able to keep pace with the recovery of the US market after the election. So the Australian market will be weak. With the inversion trade, we go long the strong, short the weak, and so now tonight we can actually look at going short on the S&P 500 and go long on the ASX 200. Once again, if you've got a Trading Tigers day trading manual, it's on page 31 of the 2020 manual. So the inversion trade, we need a ratio, and the ratio is fairly straightforward. For every one Australian contract we use, we can have 2 US contracts. So I can go long on the Australia 200 and short on the S&P 500, and our target will be about 10% of the account. If we can have a $10,000 account and make $1,000 at any given time, then we see a net profit of about $1,000. That's a great time to close the trade out. Otherwise, we can close the trade out at 10 a.m. the following morning. So on the AT Pro platform, we use the Australia 200 CFD and the S&P 500 CFD. So tonight, we can go long before 4:30, the Australia 200 CFD, and then we take an opposing position on the S&P 500 CFD, and the S&P 500 CFD will have 2 of them for each Australian contract we have. Now, if you'd done it last night was a fairly standard inversion and it was profitable. So I went short at 34.35 at 4:30 yesterday. And if you had a $10,000 account, you could have done 10 contracts on the S&P 500 and then gone long at 61.60 on the Australia 200 for 5 contracts. So we've got an inverted position, right? And one market goes down, the other market gets drawn down, but there'll be a disparity depending on which one's strong and which one's weak. So the Australian market is the stronger market, and so it didn't fall as much over the night. So I closed it out at 10 o'clock this morning. The S&P 400, I made 30 points. And so I had 30 points times 10 equals 310 US dollars. And I convert that to Australian dollars, that's about 420, it's $419 and something or other. But we just call it $420. And then with the Australian market, I was long at 6105. I closed it out at 61. That should be 6060 this morning. So I lost $275 there. So I made $420 here, lost $275 there. My net was $145. Now that's scalable. You can do that with 1,000 contracts on each side if you want, and then all you're doing is adding zeros to the outcome. So, you know, technically that could have been a $14,000 trade if we'd done it with 1,000 and 500. The exposure is if the US market rallies on something and the Australian market doesn't. So we're carrying some risk to the US market suddenly coming up with a vaccine for COVID or releasing another stimulus package this weekend or something like that. That's an exposure to us because the US market will go up and the Australian market won't get that excited about something like that. The benefit is the US market is expected to go down and the Australian market is not expecting to go down. So all else being equal, we can run those two scenarios with no stop. And they just locking in, got to get used to that camera, they're just locking in a profit loss strategy, and we're just arbitraging between the long, the strong and the short, the weak. And worst case scenario is, as I said, that there are scenarios where we can lose money here, but all else being equal, this is a very good time of the year and a very good position just coming up to the US election for that trade. It's called an inversion trade where we travel with no stop and no limit, right? Now, during the night, the US market actually got down to 33.70, and that had a substantially higher net profit value. I think it was about $380 was the net value of the cancellation of the two during the night. So if I'd got up during the night and had a sneaky peek, then I would have been able to close it out at a much higher level. It's hard to know. It's a bit of a guesstimate. If you've never done an inversion trade before, there's plenty of opportunities for inversion trades where you get one market divergent to the other. And so the best way to try this out is to start with 2 US contracts and 1 Aussie contract. And you can try that this afternoon or this evening and let it run down and just see how they work out. Have no stop, have no limit, and keep an eye on it and see what your profit and loss, it changes regularly throughout the night. And at any time, if you close out one position, you must close out the other. Otherwise, you're carrying a systemic risk to the marketplace in the opposing direction. Gold. Okay, we're going to talk about gold for a second. It's a haven for instability. Now, a lot has changed with gold. It's not the commodity that it was in the 2000s, and it's certainly not the commodity that it was in the 90s. A big thing that has changed is the Chinese yuan listed in November 2015 with the International Monetary Fund, the IMF, and to balance out their currency, so an external force like United States could not put upward or downward pressure on their market without control. They've taken up using gold to balance out the value of the yuan, making China the biggest purchaser of gold in the world. Though if you Google it, depends on where you end up, sometimes India, sometimes China, but India uses gold for a completely different scenario. China is using physical gold to balance out its currency, and it makes it very difficult for another country or another hostile entity to come along and put a run on their currency or rise their currency up dramatically. However, and it's important to remember we had an instance not that long ago where the yuan was increasing its value versus the US dollar, and the Chinese government sold 3 metric tons of gold in an hour and dropped gold $75 in an hour, and they used that to adjust their currency. So they're not adverse to literally selling very quickly. In fact, from a cultural point of view, China has a habit of doing big hits. We want to buy this, we just buy it. We want to sell this, we just sell it. We'll talk about that next week. We've got a Chinese trade coming up, and we can talk about the ins and outs of China versus the world in market strategies. Now, despite all these, gold is still a fear commodity. And it used to be in the 90s, if there was any uncertainty at all, then gold would rocket up. If there's everybody's calm and making money, interest rates are good, gold comes down. That's not so much the case this time, but when we face the uncertainty of a US election, we'll find that gold spikes significantly. Now, if you have a look at last week's presentation, we talked about gold normally going up about $50, and we had a look at the last couple of US elections where they went up. Now, we've got here, we're anticipating, we enter on Friday afternoon, and we expect gold prices to shoot up prior to Tuesday night or Wednesday Australian time. We expect the market to shoot up about $50 for the gold price, right? And then we're expecting it to come back after the election. This one is a relatively easy trade, and if we go back historically over the last 11 elections, this has a very accurate outcome of success historically. This one, really dependent on where you get short. Like if you can get short up the top, you might get up to $50 back. This one is pretty good for $50 or more. This one may give you up to $50, but is generally a portion of that, and there's no set start date here. So you carry a little bit more exposure. The timing on this one is harder. We say it's a 63%. It's not quite 2 and 3. This one is literally 4 and 5. That 4 and 5 elections, you can make $50, and with the election positioned as it is, over the weekend, we can make it the gold. We can take a long position on gold, and we'll make $50 per one contract. That's $50 US, by the way, not $50 Oz. Okay, so we go to the City Index platform, and we do the gold per 01 CFD, and then as a guide, if I had a $10,000 account, I would do divide by 2,000. I would do 5 contracts. It's a guide only. You can choose whatever you want. This is a very conservative approach to derivatives trading. If you haven't done it before, the conservative approach is good. For those of us who've done the gold trade many times over the years for the US election, I've been doing it since 1996, and it's been a bit of fun every time. It's more exciting on the lead in than it is on the lead out, let me tell you. You sweat a bit on the back side of the trade, and it's not for everyone. But the front side of the trade, all else being equal, the gold price should shoot up. So market's trading at about 1903.04 this afternoon, goes up, and we're back in, say, 1955 US gold per ounce. You'll notice that the gold stocks will actually sneak in the Australian market, will actually sneak up on Friday afternoon as well. They'll benefit from a higher anticipated gold price. So that's something that you can start on Friday. Now, the Trading Tigers signature trade that we've been doing since 2006 when we started taking Trading Tigers on at Investor Centre is the Melbourne Cup trade. Investors like to tell you that the market's governed by fundamentals, and to a certain extent that's true. And traders like to tell you that the price action is already inbuilt into the chart, and from a certain point of view that's true as well. And both of those have merits and disadvantages in using those systems. Now, I do trading based on behavioural mechanics. We use charts, we use fundamentals, but the important thing is people. And the market is made up of people. If people think that Telstra is not worth anything, it falls down to $2.70. If people think Telstra is worth something, it falls down to, it moves up to $5. And you can have a look at Telstra at the moment. We can see fear dominating Telstra. The fundamentals of Telstra don't support the low price that it's got at the moment. On the AGM, they said, you know, everything's looking okay for sustaining their dividends, etc. And so that's fine. But the upcoming 5G rollouts and everything are a significant cost for Telstra. People are nervous. The take up on 5G is not going to be what everybody thinks. And we're seeing Telstra being sold off. So it's people driving the market. So we know that the Democrats are going to lobby for strong gun restrictions. You would go short firearms producers, light firearms producers in the US, but it's gone the other way. The share prices have gone up on those stocks more than 30% in the last 2 weeks on the possibility of a Democratic win, based on they're going to have increased sales before legislation can be brought in. It's the other way around. So it's people that drive the market. If people are fearful, the market will generally go down. If people are happy and excited, the market will generally go up. So on Friday, I'm going to do a session at 4 o'clock just for the Trading Tigers signature Melbourne Cup trade, right? And I'll go through the mechanics of it, the history of it, and how you can actually make some money from the Melbourne Cup without having to go into race 6 and pick a horse. I think maybe it's race 5 and pick a horse. The success rate of the Melbourne Cup trade is unbelievable. So once again, make sure you've got a trading account, particularly for the Melbourne Cup trade.